Hey folks, Dan Frio here with your closing bell for September 3rd, 2025. So I told you last night, hold on, rates are going to come right back in line. And what happened? Well, rates came right back down in line. So what I want to talk about today is something interesting that happened. I got an email from Yahoo Finance that wanted to interview me on what is going on now or what's going to happen now with Lisa Cook if she gets booted from the Federal Reserve. So Yahoo Finance actually reached out to me asking me that question. So hopefully in the next couple days, we'll see my article in Yahoo Finance. So let's get over to the headlines that we're seeing in today's news that will be affecting these and the whys behind it, folks. Well, like Yahoo Finance, their question to me was, well, with Lisa Cook happening on the Federal Reserve, what's really going to happen to interest rates? Well, there's more going behind the scenes than the Lisa Cook issue. Okay, so first let's go over to where the markets are taking us. And there's a reason for why I'm going down this path, because I want to show you the JOLT number. That's the job openings and labor transfer number. It came out today, and usually it doesn't move the market at all, but today's number was a little shocking, so I'm going to go to there in a second. But let's look at what happened in the markets generically here on the Dow Jones and the S&P and so forth. That's not a Cinderella story, but I'll take it. Got the Dow Jones down, well, it's still ticking, down 88. S&P up 25. This might be yet another record high. And NASDAQ's up 188. We got the VIX down. Look at this at 16. It's down 4%. So the markets are starting to stabilize a little bit. Let's go to crypto. Oh man, it's 112 now. And now oil. Where's oil at? And it's down to $63 a barrel, right where we want it to be. Love $60, but we'll take $63 right now on the inflation front. So now let's get over to the news that we got today. So on the headline news that we got on the economic calendar, the only thing that really came out today was the JOLT index. So let's go over to Rick Santelli, and I'm going to let him bring this number to you. Job openings and labor transfers. How did they come in this morning, Rick? Because it had a bigger effect on the markets than I thought it would be. Why?
Hi, Carl. Indeed, you are watching yields move lower on the curve, and that is primarily because job openings and labor turnover, known as JOLTS, comes in on the light side, expecting a number close to 7.4 million. This is a July read. Comes in 7,181,000. That would be the smallest job openings number going all the way back to D's of 2020. Now, if we look at factory orders for July, comes in exactly as expected at minus 1.3, which is actually the strongest number since it was positive in May at over 8%. There is a revision in the rearview. No revisions yet. Factory orders ex trans up 0.6, also exactly as expected. Now, when we get to durable goods, these are final reads. We had mid-month reads. So minus 0.6, positive 0.6, remains positive 0.6. That was in the factory orders. Durable goods, minus 2.8, stays at minus 2.8. And what's interesting about minus 2.8 is that is a very weak number. And what we've noticed is there's a big tug of war that was going on in durables. You had minus 2.8 on our final July read. If you look at June, it was minus 9.4. That was the worst going all the way back to April of 2020. Then prior to that, you had a whopping 16.5. That was the best since 2014. So the tug of war going on with tariffs and all the issues is finally starting to settle back just a bit. Now, if you look at ex-transportation, we lost a tenth from 1.1 mid-month to 1%. And if we look at capital good orders, non-defense ex-air proxy for capital spending, it remains at 1.1%. And that's a pretty good number. That would be the best number going back to May, when it was up almost 2%. And finally, if we switch from orders to shipments, 0.7. So about 0.75%. And that's exactly where it was on the mid-month read. As I pointed out, we are now hovering around 422 in a 10-year. That would be down 4 basis points. 361 in a 2-year. That's down 3 basis points.
So that's what he came out with this morning. Then we got even better news throughout the day. We have next, this Fed official right here. This guy might be the new or next Fed official or in charge of the Fed, Waller. He just came out today, and what's he saying? Fed Governor Waller, Fed should start cutting rates at the September meeting. So now he's pushing for that. So then when you have kind of a weaker jobs numbers, so here's basically what you're looking at. We had the economic calendar coming in, the JOLT index, last reading was 7.35. 2025. Came in at 7.18. Why is this bad? Well, right here. What did the jobs data show? Job openings dropped significantly in July, falling to 7.18 million, well below the forecast. The job opening rate fell to 4.3, the lowest level since mid of 2022. Together, these say cooling labor market. What should happen then? Well, it should be increase the odds of a rate cut. And then you also have one of the Fed officials coming out saying we should cut rates at the next meeting. So that's what the news basically which you have so far that we have on the front now. So now tomorrow, what are we focusing in on? So now we're starting to get a little more jobs data. We have initial jobless claims, and we're also going to get continued jobless claims. Okay, how many jobs are compiling or starting to pile up? That's what we're concerned about. We're going to skip through ADP. This shouldn't have any effect on the market, folks. Shouldn't have any effect, but it could. And then we're going to get to the servicing PMI. That's going to show us what the prices are right through here. The price index and the PMI here, it's going to show us the inflationary numbers. And I'll show you or explain that to you tomorrow, how that data comes in. That's all going to come in basically tomorrow before the market's even open. And then on Friday, we get the official jobs numbers. And all those, the reason why we go over all those is because that's what the Federal Reserve monitors. They control those over there, and that's one of the reasons why I think rates or mortgage rates, they need to start cutting those for mortgage rates to start coming down. Here's what the markets are looking at. They're looking at the inflation. It's still a little elevated, but it's looking like it's staying calm. The jobs numbers, well, we're going to start seeing some more of these numbers. We're going to get the actual official number this Friday, and then GDP is still increasing much more than anticipated. Last reading, well, the last prior number we had was a negative 0.5. Then it was revised to 3. Then it was just revised last week to a GDP at 3.3 so far in the Q2 of 2025. Fantastic numbers that we're seeing. So really, when you're looking across the board, there's really no catalyst tomorrow that should really upset the apple cart. There's really nothing here that should shock in all the markets unless we get a complete dismal number one way or another on the jobs report. And that's coming tomorrow with the initial jobless claims, but on Fridays when we get the official report. So tomorrow's data, it can move the market a little bit. But between tomorrow and Friday, going to be a lot of employment numbers to look at and figure out from there where the Fed's are going to react from there. So that's our report for today. My name is Dan Frio. If you're out there and you're looking for some assistance, if you're looking to buy or refinance your home, I have a slogan here. My slogan is one application, one credit pool, and we're going to compare your loan to over 30 different lenders. How do we do that? Let's get over to my website. Here's what I do, folks. I'm actually licensed in all 50 states as well as Puerto Rico because the bank I work at, I work at a bank. It has a federal license, so we can lend all over the country. The unique thing that we have here, though, is we're also set up with over 30 different lenders, and this is where it gets a little intriguing. The reason why I joined this bank is a lot of my colleagues came over here because we need outlets for you guys. If you're calling me anywhere in the whole country, I want to be able to help you. If you have rate quotes or a scenario that's like, okay, Dan, I need an investor loan, a bank statement loan. I just need an FHA loan. I want to be able to make sure I can facilitate any loan product you're looking for as well as make sure we're competitive on the rates and the fees. So what we did is we set up with over 30 different lenders to do this. We're going to get your loan approved here at the bank. And then what we're going to do is use our rates as well as 30 other banks, their rates. And if they have a lower rate, I can place your loan right through there, and I'll be your loan officer the whole time. So if you want to learn that and a little bit more on how to refinance, we can talk to you then. But if you're looking to buy, you got to check out this video, folks. This is a video if you're looking to buy. I don't care if it's your first house or you're moving up or you're moving down. You might qualify for up to $7,000. That's basically a forgivable grant. You don't need to pay it back. There's no lien on your property. So when you go to refinance in the future, you don't have to worry about that getting in your way. So if we can help you out in any way, or you just want to learn how mortgage rates work, please join me each day. Don't forget to subscribe right down there if you haven't yet. I'm trying to get to 40,000 subscribers as quick as we can. Only you can help me. So thanks for watching this evening, folks. God bless. Have a great evening. I'll see you back here tomorrow morning. Let's see how these numbers come in that will be affecting these things tomorrow. Thanks for watching. Bye-bye.